Welcome back to the channel, guys. I'm your host, Buckning, and today we're going to talk about a few things, some things happening as soon as you see this video. So we're going to do some predictions, of course, because Bank Canada is doing some crazy stuff. Not crazy stuff, but stuff that needs to take care of what is the main objective is to defeat inflation. So we will go through the portfolio today. When you see this video, you'll probably know about the earnings calls that happened within big tech. And when I'm talking big techs, I'm talking the guys down south, formerly known as FANG, but now Mang. And so we will talk about that. We'll probably just talk about one of them because I am keeping my eye on one of them for the most part. So if you're new to the channel, welcome. This is where we put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. And if you're not new, welcome back. So I just had to shut off a light, but let's go through the portfolio. So today, portfolio is closing out at $14,189.96, up $141 on the day, up 1%. For the 1 week, we're up $119.08, up 0.85%. For the 1 month, up $280.41, up 2.01%. For the 3 months, down $388.41, down 2.66%. For the 1 year, down $361.99, down 2.49%. And for the all, we are up $822.60, up 6.15%. We have $53 sitting in the cash account with $100 that will be available for this Friday's purchase. So pretty much green across the board there. The S&P 500, not bad today. There it is for the ETF, because that's one that I always keep my eye on. And so, yeah, back up to 93, which is great. So we're doing not too bad there. Total return, we're only down $6.61 now. So good thing we make those continually buying dollar cost averaging at regular intervals. So Bank of Canada, let's talk about that first. Bank of Canada, when you see this video, we will probably know what the increase in interest rate was, and the majority says 75 basis points, which I totally agree with. So we'll find out when you see this video. If I'm wrong, just leave it down in the comments when you see this video. But it's come to a lot of people's attention because I've seen this a few times now where people are talking about a recession, not a crash, a recession. And the thing is, I think Tiff, he's the governor, not the governor, the governor of Bank of Canada. His eyes are set on beating inflation. He's willing to live. Apparently, he's willing to live with a recession in order to beat inflation. Now, I've never been through like an actual recession in my time. So if we experience one, the only thing I can do is for myself, and this is not financial advice, is look at what not the previous generation, but the generation that did live through, the Great Depression and 2008, and really just learn from what they did not do in order to prepare for if that were to happen. Because if they are talking about that, I just want to make sure I'm in a position where I'm not in the position that those people that lived through the Great Depression or the financial crisis really went through. And I don't even think I don't know if the financial crisis was labeled as a recession, like a full-blown recession, like the Great Depression. But, the best thing to do is not run to the bank and do what's called a bank run, where everyone goes and withdraws all their money because they think it's going to evaporate. And I've talked about that probably a long time ago. What happens when a currency goes down the hole and it's just not worth anything anymore? They typically will bring in a different currency. And we've seen that happen. We've actually seen that. I've only seen that happen maybe 1 or 2 times in my lifetime. And so just something to think about. But my prediction is that Tiff, good old Governor Tiff, Bank of Canada, is going to raise 75 basis points, which puts everyone not in a bad position, because I still don't see the struggle that, well, maybe I do see it a little bit, where when it comes to real estate, but I don't see it that much in companies or the stock market. Now, Every time he raises, inflation or the rate for the Bank of Canada, we see something happen in the market, just a reaction. But we're expecting it to happen. So who knows? So yeah, that's my prediction, 75 basis points. So when you see this and it's 75 or it's not, just let me know down in the comment section below. Now let's talk about the earnings week, the earnings day, actually, that the big tech companies came out with. So Microsoft reported, I believe Meta reported, which is formerly known as Facebook, and then also Google. The one I'm really paying attention to is Google. And the reason I'm paying huge amounts of attention to Google is because, as you can see, we're on this platform. Well, I'm currently on this platform. Well, we all are. You're watching it. I'm making it. We're all on this thing called YouTube. And the thing about Google is I really dive deep into how their business operates. And I don't know if you know this, but Sundar Pichai, I think that's how you say his last name, right? Sundar Pichai, the CEO of Google, has come out with a few things that he is doing. The cool thing, the thing I find very impressive about Sundar, is he became CEO of Google in 2019. Now, if we remember what 2019 was, it was actually the year right before everything kind of just went hell in a handbasket for a lot of people, for the world, essentially. And he's taken Google to, I believe, a whole new level. And what is, I don't really understand how Google stock price, because stock price is not really an indicator of how the company's doing, because I think the company's doing fine, in my honest opinion, just because they reported that they missed earnings based on earnings per share. The stock price dropped right down below $100. For me, it is possibly a really, really good value play. So the thing about Sundar, let's get back to the Sundar Pichai thing, is this man has stated that he is trying, well, he is, I think they're like abandoning a bunch of like products and like quote unquote future bets on tech, on not tech, but like, projects that they're working on in order to make the company 20% more efficient. And what does that even mean? So when I look into that, when I hear that the CEO is going to try and make a tech company 20% more efficient, that means costs of operating comes down, still maintaining the same level of top line revenue growth and free cash flow, which I find very, very important. And if he's able to do that, having a consistent cap expenditures to keep the company running and to increase revenue is a very attractive thing. The other thing is Google doesn't have that much debt. They can literally pay off all their debt with 1 year's worth of free cash flow. I believe that's free cash flow or revenue. 1 full year, they can pay off all their debt. The thing about this company, Google, for just importance sake, is that with minimal amounts of debt, it's very hard for a company to fail. And I'm not going to use that cliche, too big to fail, because I don't really believe in that. But I do believe in a company with little debt is harder to fail, because they don't have to worry about debt obligations to creditors, and they continue to deploy their cash in places that it's not leveraged, so it's not the risk of using debt to explore or grow adds another level of risk. When you don't have that level of debt, and you can deploy capital to areas, you're not too concerned if you lose a bet on that product or that service. The other thing is Google Cloud, which is the competitor to Amazon's cloud service, Apple's cloud service, this is a service where I think everyone's trying to get into. Their revenues grew. However, it did cost more, but this is the new thing is the cloud. I always see videos on cloud engineers and what they're looking for. But anyways, Google down, even though their earnings weren't that bad, to be honest with you. CEO is trying to make the company 20% more efficient. Now they are losing a little bit of battle to TikTok, but I think long term, I think the YouTube Shorts thing is going to take off. I think it already has, with the great traction that's happening. There's just a lot of things happening within that company that I find very, very impressive in times like this. And the thing is, of course, they never mention like layoffs or anything like that, but I know a lot of companies are talking about, we're going to be making cuts. But for them, for Google, they're like, no, we're going to like reduce the amount of time or the amount of people that we hire, but not necessarily cut, but they are cutting projects. It doesn't necessarily mean they're cutting employees, which is fine. And so that's Google in a nutshell. Keeping my eye on them. They're below 100. So finding it very, 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 very attractive. And dollar cost averaging down my current position in Google, of course, not in this portfolio, but another portfolio. That's why I'm talking about it. And so that's pretty much all I wanted to talk about, guys. Don't forget to leave a like and subscribe. Hopefully you did enjoy the video, and hopefully it wasn't too blabberish. So don't forget to leave a like, subscribe, and we'll definitely see you guys in the next one. Bye.